We've all heard the saying, buy low and sell high, but how might a technical investor recognize potential price floors and price ceilings on a chart? Let's explore it. Good morning and welcome back, everyone. It's Monday morning. That means it's time to get into our ongoing series of discussions called Getting Started with Technical Analysis. We've already gone through 3 lessons, and today we're on to lesson 4, which is the identification of price floors and price ceilings, otherwise known as support and resistance. If you're just brand new to technical trading, you're in the right place. We're just getting an introduction to charting. If you're a returning veteran, I want to welcome you as well, because your contributions in these discussions are always valued. So I see Wayne already chiming in. Hello there, Wayne. Everyone else, welcome aboard. We have about 25-30 minutes ahead of us, so let's dive straight and get the most out of it. We'll set a more specific agenda in just a moment. But first, we have to pause to consider the risks associated with our investing. All investing involves risks, including risks of loss. Past performance is not a guarantee of future success. In order to demonstrate the functionality of the platform, we will be using actual symbols. Don't take that as a recommendation or endorsement of those securities or the strategies discussed. No soliciting and no photography in this class is for educational purposes only. All right, hello there, Dwayne, Pierre Paul. Yeah, I'm recognizing a lot of familiar names. You're always invited to join me each week. We're going to go through a series of 8 lessons. Let's see where we are in that series. So we've gone through lessons 1 through 3, an introduction to technical analysis, setting your chart up, trend identification, and so today we're on to support and resistance. Here's specifically what we're going to discuss. Today we're going to attempt to learn, this is what I hope that you take away from this. We're going to understand common techniques for identifying support and resistance and apply those principles and techniques to current examples so that by the end of this, you feel a lot more comfortable with the navigation of price floors and price ceilings on a chart with a brand new symbol in your own paper money account. That's what I like. All right, good morning, Chuck. Hello there, Tanya. Hey, if you're new, welcome. All right, and also, by the way, if you're stepping in on lesson 4, no big deal. I try to go to pace so that everybody can follow. If you want to catch up on lessons 1 through 3, you can go check those in the archives. Aloha there, Joanne. All right, but let's just jump over to, actually, let's get right into the identification, support and resistance. Let's start with support. So what is support? Well, support is a price floor. Have you ever noticed that sometimes it seems that a stock just doesn't seem to want to go below a certain price level? So it'll come down to, let's say, for example, $40. I'm just grabbing a number out of a hat. And then it bounces up and it rallies up some distance and comes back down, and it seems to get right in that range of $40 again and then bounces again. So what technical traders will sometimes do is look at those areas for potential what we call support or a price floor. So what's the value of recognizing those sorts of patterns? Well, conceptually, what they're looking for potentially is an entry level. So if you have a stock that's ranging back and forth between, let's say, $40 and $50, and it seems like every time it rallies up to 50, it bounces back down, and every time it comes down to 40, it bounces back up, I don't think it takes an incredible level of sophistication to conclude that, boy, the next time that thing comes back down to 40, maybe we'll look to buy, right? That's the concept. But a couple of clarifications I want to make on that point. How often is it that the stock comes down to exactly the same price level? It comes down to $40.00 and then bounces up. And then it comes back down, it goes to $40.00 and bounces back up. Quite uncommon. So even if you've recognized a support level, what you'll notice is that instead of coming down to a specific level, very commonly it'll settle into a support range. So that's this blue area or this gray area that you're seeing on this slide. It's just a recognition that for many technicians, they look at support as a range of prices. So they wouldn't say support is $40. They might say support is around $40. And of course, this is not $40. In this case, it would be around, looks like around 55, right? And to the opposite extent, they wouldn't necessarily say that resistance is around 62. Maybe it's around, pardon me, it's not at exactly 62. Maybe it's around 62. So there's your introduction to support. Let's go see an example of it. Let's pop over to our charts. And a recent example of, this is one of the S&P 500 component companies, and all of these examples are going to be coming from the S&P, just purely for educational purposes. But here's Public Storage, and you'll notice that Public Storage has sold off down to about $195, and then it rallied up. Initially, there were small rallies, down to 195-ish, right? Area of 195, and then rallied up to about 200. Back down to 195, back up to about 200, down to 195, and then it blasted off, and it took off, got all the way up to about the 215, 216 range. Now, why do support and resistance seem to hold some significance? Well, think about this. If you're a brand new investor to PSA and you see it selling back off and it's going down to that same area. Actually, this could be even true for veteran investors in PSA. What might be going through your mind as it's getting back down to that 195 range? You might be thinking, hey, I've seen this story before. I've heard this story before. The last several times it got down to 195, it bounced and headed higher. And so that may spur some traders to place some orders that can provide support at a specific level. That's why we call it support. It's as though the price is being buoyed up or it's being supported at a specific price. So let's draw in, and I showed you how to use drawing tools in an earlier class, but let's just draw in our support level, and that looks like that's at about 195. All right, so there's one example. Let's go back and learn about the rest of price floor and price ceiling identification. So next on, we've talked about floors. Let's talk about ceilings. And this, we refer to it as resistance, because this is the case where we think that it appears that as stock prices want to go up, they bump into some invisible barrier, a ceiling, and then get pushed back down again. So we call that resistance. It's as though price ascension is being resisted from above. So here we have the price rallying up and then pulling back, rallying up to a similar level and then pulling back. All right. Now, another point that I want to make is we're talking about support and resistance, and this again may seem self-evident, but the more times something happens, it's seen as being more significant by technical traders for the most part. Okay. So if something has happened, once, maybe that holds some technical water, but not very much. Let's say the stock has come down to $40 at a support level one time. All right, well, that's an interesting tidbit. If it's done it twice, okay, now we're starting to see a pattern emerge. 3 times, 4 times, 5 times. Now that confidence level in support could conceptually rise. Oh, Chuck is asking a great question. He says, can you get some kind of a confirmation of a support area from other things like stochastic or MACD? So what Chuck has just made reference to are a couple of what we call technical indicators. Chuck's great question. Guess what's on the docket for next week's discussion? Technical indicators. Yep. Yeah, because just because we're down at a support level might not spur every technician to take action right then. They might look for some other piece of technical evidence. Very good question. A confirming piece of technical evidence. So here we have a hypothetical area of resistance, a price ceiling that's had a couple of touch points, but I want to emphasize once again that there tends to be some variation in where that ceiling lies. So remember that just as with support levels or floors, price ceilings or resistance tend to fall within a range or an area. So this seems to be an area around a $62 level. All right, but you'll notice here was a touch point that came up a little bit short of 62. Here was a touch point that seemed to touch right on 62. Here are a couple that went just beyond 62, but that's, you might think, oh, well, it's not a valid resistance or it's not a valid ceiling because there's some variation around that price range. No, actually, that's more common than not. So let's go have a look at some examples of resistance. Flashing back over here to our paper money. How about we have a look at VRTX? You'll notice with VRTX, over the course of the last several months, boy, it just seems like that stock can't seem to rally above about that 186 level. Right? We'll say in the 186 range. It did get through it a little bit one time right there. There were a couple of hours intraday where the stock poked its nose up above that level. That's not necessarily a negative event in the identification of resistance level, because what we're looking for here is an area. So, you know, we might define this as being a range of prices between maybe 189 as the top end of our resistance and maybe down to 184 as the bottom end. But you can see right now that price action is just bumping its head and maybe coming down. Okay, Wayne, you got it exactly right. Joanna's saying, isn't it breaking through resistance? That's a possibility, right, Joanne? Sometimes you have to wait to see. So the moment of the event, when it looks like it's pushing up through, you may take action on that, or you might wait to see, well, is it still in the area of resistance? What many technicians will do, or what you might do, is look at that and provide a little bit of, how might I phrase this? Some tolerance, right, within that range. So, you know, maybe 1 or 2% above, 1 or 2% below, something like that, a fixed dollar amount above or below. But just recognizing again that we're looking at a price ceiling in an area. Maybe another example might be helpful. So let's look at WAT. Here's WAT. Let's see if you've trained your eye already to recognize price ceilings. If you're looking at where we are right now, where might you look to see a price ceiling? Because what a technical trader might be doing here is looking at this chart saying, well, all right, so Waters Corporation seems to be on the upswing. Is right now a good time to buy? If it's right below a price ceiling, maybe not. Look at this. Over the last, 6 or 7 months, right around that $200 level. Seems like every time we see a rally, it gets pushed back, sometimes down to 190, sometimes further down, right? But just think about if you're weighing winners versus losers, at least in unrealized gains or losses to this point, who's doing better? Those who buy at $200 over the last 6 or 7 months, or those who pump the brakes at $200? There was a very short window where somebody might have had a temporary gain, and maybe if their timing is really good, they got out with a $4 gain, 2% gain, something like that. But other than that, almost all price activity has been below the $200 level, right? So a technician might look at this, and it might cause them to take maybe a short-term bearish position on something like Waters. Okay, so there's a couple of examples. Hopefully what you're doing, though, is in getting some repetition with these concepts, you're getting a higher comfort level with the identification of support and resistance. But my next question is, do support and resistance always happen at exactly on a horizontal plane? Or have you ever noticed sometimes a stock seems to get ahead of steam and it's almost as though it's riding an escalator upward, or it's just stair-stepping higher? And boy, within that pattern, if it's stair-stepping higher, that's what we call an upward trend, which is what we discussed last week. Conceptually, might there be a better time to buy within that upward trend? And if you're looking to exit, might there be a better time to sell within that upward trend? Yeah, the identification of support and resistance can be applied to upward or downward trends. So let's go talk about that. So this is what we call diagonal support and resistance. In this case, when you have an upward trend, it's not uncommon for an emphasis to be placed on identifying areas of support for potential entry. And so in this hypothetical scenario, we have some theoretical stock rising from about $55 back in this February timeframe up to above $68. And you'll notice there seems to be this invisible ramp on the way up, and that's what we call support. And as it's been going, we have 1, 2, 3, 4, about 5 there, near miss, 5, 6, 7 touch points. So let's go see if we can find an example of that in current market conditions. Now I'll tell you, as I was preparing for this class, it was a little bit difficult. I had to dig a little bit harder for an example of diagonal support. Why is that? Well, because the markets have been coming down generally, although over the last couple of weeks it's been more of an upswing. Looking at a yearly chart, which is what we're on, we've been seeing some rare examples. So let's go have a look. Back to our chart. Diagonal support, Eli Lilly. Look at this. Yes, there are some stocks that have been making upward progress, moving left to right on a one-year chart. But you'll notice occasionally a little bit of a departure below that support area. Does that disqualify this now from what you know as a valid support area? Very likely not, because again, as with horizontal areas of support, we're looking for not specific or finite lines of support. We're looking for ranges or areas. So yeah, it just seems like this green dotted line or dashed line represents a potential area of support. Now you might even notice more recently, what about right here? Can we combine areas of support, horizontal with vertical or with diagonal? Yeah. Resistance might be just above. So even within a nicely upward trending stock with an apparently well-defined area of recent support, in this case we might be up near a resistance level. Oh, Chuck says it's a range. Excellent, Chuck. Yeah, now you're combining two concepts. We're going to do that in just a moment. Maybe what I'll do, since you brought it up on Eli Lilly, I might circle back. As a matter of fact, I'm going to do that. I'm going to make a note here in my notes. I always prepare an outline of important topics that are, or points that I want to cover with you. So I just added that to my notes. But let's look at one more example. There are again, comparatively few and far between examples, but McDonald's has been making some upward movements. Now recently you see that it sold off along with most of the major indices down to this low. So how might a technician, if we're looking in the rearview mirror, how might a technician have been looking to identify where a price floor is going to be if you're looking at this coming down from this peak? Well, if you're drawing a trend line, you can see there was some way to go. And then it finally touched that trend line. In this case, the trend line held, and it looks like McDonald's is heading back up. So that's starting to illustrate the potential value to a technician or a technical trader as they're applying this understanding of support and resistance levels to a chart. All right, so that's diagonal support. Guess what? Yep, we can also potentially look for diagonal resistance. Let's see what that might look like. You probably already conceptualized what this was going to look like. Yes, a number of touch points along a diagonally descending plane, and again, the more, the stronger, right? At least that's the concept. And here we have an example with 1, 2, 3. We might even call this one a fourth close touch. 5, 6, 7, 8, and so on. So there's your theory. Let's go see it in practice. Let's look at a company like RTN. Here's Raytheon. Okay, from what you've just seen, where might you draw in your own minds? I'm going to do it on the screen, but do you see a diagonally descending area of resistance, a price ceiling that a technician might pay some attention to? Looks like we rallied up to a short-term peak right here at about 209, 210, something like that. And since then, the stock has been coming down. So let's just connect our dots here. And it looks like, boy, if you're a technician looking for an entry here, might that be more of a bullish entry or more of a bearish entry? Well, the way it's been behaving technically, we might be near a diagonally descending ceiling, price ceiling. And so you might look for bearishness. It's not a guarantee though. It could certainly break out and move higher. All right, but let's take the next logical step. Who was it that said, okay, Chuck says it's a range or a channel? Exactly right, Chuck. Even this one, Raytheon, might be a good example of that. But if you've identified a relatively clear support and resistance level, going all the way back to the start of our discussion, where I said, here, let's say you have a stock that's going between $40 and $50, back and forth and back and forth and back and forth. Well, sometimes that's called a range or a channel, and conceivably that is tradable going up or going down or both. So let's see, you know what, actually I wanted to show you one more example of a downward sloping diagonal resistance area. Let's look at ANET. You see that? Once again, prominent peak. That's one touch point. At that point, not much of a resistance. It became more of a resistance when we get a second, a third, there's a near fourth, and now it looks like we're working on a fifth. But let's start to combine these things into what we call channels. All right? So what is a channel again? Well, I've already described it conceptually. It's just where you've identified support and resistance that are roughly parallel. Now that's upward sloping, downward sloping, or sideways, horizontal. Okay? What might that look like? Well, we already saw it on Eli Lilly. Here's a pretty good example of a channel. Now notice we have resistance in an area, sometimes a little bit higher, sometimes a little bit lower, sometimes right spot on. But there's a horizontal area of resistance and a horizontal area of support. And again, conceptually, if you have strategies for both directions, a technical trader might look to make profits from an upswing in the stock up to resistance, and maybe even downswing on the stock back down to support. Or if you're just looking for bullish entries, you might look for just buying off support or even potentially breaking through a resistance level. Okay. Let's see, there were a couple of other examples. Intuit, there's an example of a downward sloping channel. I think you're starting to get the point. If you want to try practicing your channel identification, come down and use your channel tool. So right down here in your drawing tools, here's your active tool. I'm going to click on that, and that gives you access to all these other tools. We talked about this during our discussion of chart setup. And I'm going to click on the channel tool. Watch what that allows me to do. Let's say I wanted to identify a channel right through this range. So I can come here to my first touch point and just click once. Now my hand is off my cursor, so this is not a click and drag, it's two separate clicks. I'm going to move my cursor along. There are some more touch points, maybe up through here. And then once I'm satisfied with the position of that line, I click again, and that sets that first line. And without me doing anything, just the mere fact that I'm using the channel tool, as I start to move around, oops, let me click again, didn't seem to take, there we go. As I move again, it starts to draw a parallel line. Do you see that? And then I can just identify where I think that top side of the channel is, and click one more time, and that sets your channel drawing. The nice thing about that tool is that it keeps the lines parallel. If you're drawing independent lines, if you draw one line using a trend line tool and then draw another line, they might be a little bit wonky, right? This is going to keep those channels perfectly parallel. All right. One final concept that I wanted to cover in the discussion of support and resistance. We've already looked at support, we've looked at resistance, we've looked at combining the two. In channels, we looked at upward trending and downward trending. But there is a concept in technical analysis that an old resistance level might act as a new support level once it's broken. Think about this. It's kind of like if you're in a multi-story office building. And if you're on level 1, your ceiling is here, right? And then you go up some stairs, and your ceiling from level 1 is the floor for level 2. Okay, the same thing might be applied to a stock chart. So to help you visualize that, let's look at this slide. So here we have a stock that's been working its way higher. It has a couple of touch points at this red resistance level. And then once it broke through that, a technical assumption might be that that old resistance level is likely to act as a new support. So if the stock pulls down, maybe that presents a buying opportunity, right? So here you have this conceptualized out into the future with the dotted area. Old resistance becoming new support. Now the opposite is also true. My next slide is going to stay with old resistance being new support, but sometimes you'll see old support acting as new resistance. So imagine now you're going down the stairs in your office building. So what was your floor for level 2, once you get down below, is now the ceiling again. And the concept is the same in technical analysis. Okay? So there we go, a couple of examples. The first one was more hypothetical, just a generic drawn chart. Here's a more realistic example with price and time represented. But let's go look at a real example. All right, now these really are just going to be probably stronger examples of old support acting as new potential resistance because of what the markets have done. They've really broken through price levels rather than breaking up through them. But here you see Kansas City Southern seemed like, boy, the shareholders were just keeping it above that 105 level for whatever reason. It would come down and bounce up, come down and bounce up, come down and bounce up. And then it finally, on a pretty strong day, broke down below that. There was a little bit, maybe a few days, where it stayed in that same support level or that support area, but then broke down and through. And you can see as prices started to rally, they just failed time and time again to get above that 105 level in any meaningful way. Well, Tanya just asked a great question. So is 1 year good? Is 1 year a good length of time, or is 5 better for long-term stocks? Good question. Good question. Yeah, and typically a technician will try to customize their time frame for their preferred length of time that they're in a trade. Tanya, I don't know that I can give you a great example, a great answer to that in the very little bit of time that we have left, but maybe, yeah, we might need to park that for another time. But yeah, going longer for a longer period makes sense, definitely. All right, there's your final example. Actually, one more. FANG. Here's a stock that just seems to stay above about 110, broke down through, and now that looks like it's acting as a price ceiling. So there is your introduction to a number of different variables around that same thing, price floors and price ceilings. I think you can already see the potential for application here. Obviously, this is something that takes some practice, so you may want to dig into your paper money account as a next step and go through 5 or 6 or 10 stocks and just see if you can identify horizontal and diagonal areas of support and price ranges. All right? But the time has come for me to set you loose. We do have a little break in our education broadcast day. We're going to take an hour off and then reconvene at 12:30 Eastern Standard Time, where we're going to have The Splash. That's going to be taught by Pat Mullally and Mike Follett. They have an ETF focus on Mondays, so if that's a portion of your portfolio that you need to brush up on, you might want to hang out for that. But a quick reminder of the risks associated with your investing. As you review those risks, we did use real examples in today's discussion. Don't take that as a recommendation or endorsement of those securities or those strategies. That's what Pat and Mike have in store for you in just a moment. But I'm going to set you loose. I always appreciate your attendance in class today. You returning veterans, welcome back. I always appreciate your contributions. Those of you who are like Tanya and you're new, welcome aboard. Hope to see you next week. Next time we're going to be talking about using those other funky looking technical indicators, those crazy lines and all those blinking lights and things that you find on a chart. How do you use them? What do they mean? That's on deck for next time. But for now, everybody, thanks for stopping by. I'm going to set you loose. I'm looking forward to next week's discussion. Between now and then, I want to wish you the best of luck. Happy investing. Bye-bye.